Hall & Wilcox acknowledges the traditional custodians of the lands on which this podcast is recorded. We pay our respects to their elders, past and present, and to all First Nations people joining us today.
Hello and welcome to the HW Funds podcast series about anti-money laundering and counter-terrorism financing. My name's Langton Clark and I'm delighted to be your host for this series. AML CTF's at the top of many agendas at the moment, with the regime that's been in place for 17 years expected for a shake-up this financial year. Our podcast series will examine both the current state of play and future developments. In recent years, the regulator, AUSTRAC, has issued significant fines against some of the big banks and other corporates of substance. But whilst the AML CTF risks faced by those types of companies are potentially greater than for others, the regime is always applied to other businesses which HW funds regularly act for, such as trustees, custodians and fund managers. The reputational risk, let alone the financial cost of penalties following an AUSTRAC investigation or enforcement action, can't be underestimated. And it's crucial businesses covered by the AML CTF laws stay on top of the regulatory and legal requirements. In today's episode, we're going to discuss the imminent reforms to those requirements and the far-reaching effect they will have. And I'm delighted to be joined by my senior colleague, Peter Jones, who's an expert in this area. Welcome, Peter.
Hi, Lee.
Let's start with the reform consultations undertaken by AUSTRAC and the proposed updates to the AML CTF laws. So what's the status of those reforms?
Yeah, that's right, Langton. Over the past 18 months or so, the Attorney General's Department with AUSTRAC has issued 2 consultation papers. They've received a large number of submissions and they've held many meetings to shape the reform of the regime. And on the 11th of September, a couple of weeks ago, the AML CTF Amendment Bill was tabled in Parliament. The bill lays out the proposed reforms in detail. The next step in the parliamentary process is that the Senate's Legal and Constitutional Affairs Legislation Committee will report on the bill on the 13th of November. The bill will then be considered by both houses of Parliament before it can receive the royal assent. So it's too soon to estimate when that might be or how the bill might change between now and then. But the bill crystallises all that consultation on the reforms into a form suitable to become law.
And so how should our clients who are already caught by the AML CTF laws be preparing for those reforms once they're passed, assuming they are?
Well, for clients who are already subject to the regime, the bill means they need to make far-reaching changes to what they're doing now. Those changes should lead to a simpler compliance model for them, but there are lots of systems and processes they'll need to change to adapt to the new regime. So they'll need to plan a change project, and they'll need to provide enough time and resources to bed that down before the reforms take effect. For example, key areas of change will be in customer due diligence, AML programs, key personnel responsibilities, and entity grouping arrangements.
Can you tell us a bit more about those 4 areas, given their significance?
Yeah, sure. Well, there are new requirements for every aspect of customer due diligence, and to stop saying that, I'll use the term CDD. So, there are 4 elements: initial CDD, ongoing CDD, enhanced CDD, and simplified CDD. So what has to be done and how to do each type of CDD has been clarified by the bill. For example, for initial CDD, entities are required to establish various matters on reasonable grounds, which is a new objective test. Those matters include the identity of beneficial owners of their customers, and that includes a new definition of control, and whether any beneficial owner is a politically exposed person or PEP, or whether they're designated for targeted financial sanctions. For ongoing CDD, entities must apply measures proportionate to the MLTF risk of the customer in order to detect any suspicious activities, unusual transactions, and material changes to their customers' behaviour. And then for both initial and ongoing CDD, obligations may be simplified if the MLTF risk of the customer is low, and AUSTRAC is going to issue some guidance on when the risk is low. Similarly, for both initial and ongoing CDD, they must be enhanced if the MLTF risk of the customer is high, and we'll get guidance from AUSTRAC on that. Then, in relation to AML CTF programs, they'll need to be rewritten. They've got to now include what the bill refers to as MLCTF risk assessments and proliferation financing. So the MLTF risk assessment must identify, assess, mitigate, manage, and document the risk of money laundering and financing of terrorism and proliferation financing that the entity may reasonably face in providing its designated service. Proliferation financing has been introduced to align with the standards of the international regulator, the Financial Action Task Force, and relates to breaches of sanctions regarding weapons of mass destruction. Now, in addition to those two things, programs have to also now include policies, procedures, systems, and controls known collectively as AML-CTF policies. And those policies largely include the matters that are currently in AML-CTF programs in parts A and B. The change is that you no longer need to separate your program into part A and part B. You can keep those parts if you want, but you don't have to do that. So that's a summary of the changes for the programs. In relation to personnel, the responsibilities of boards and compliance officers will change materially. The bill introduces the concept of the governing body of a reporting entity as the body responsible for the strategic oversight of an entity's AML-CTF obligations. If the governing body, for example, the board of the entity, fails to carry out its obligations, the bill imposes liability for the failure on the reporting entity itself. Another change is that an entity's AML-CTF program is to be approved by a senior manager rather than the governing body, where a senior manager is an individual who makes or participates in making decisions that affect the whole or a substantial part of the business of an entity. Separately, reporting entities must designate an individual as their compliance officer. They don't need to be an employee, which is interesting. But the officer who oversees and coordinates the effective operation of an entity's AML-CTF policies must be a fit and proper person and have sufficient authority, independence, and access to resources and information to ensure they can perform their functions effectively. And then finally, new entity grouping arrangements will apply, with the new concept for grouping being a reporting group. That's in relation to group-wide risk management and compliance arrangements. So the main type of reporting group is what's called a business group, and that comprises a group of entities, at least one of which is a reporting entity, and the entire group are controlled by one of the members, one of those entities that are in that business group. The revised AML-CTF rules will allow for another type of reporting group, which is really intended for grouping partnerships and franchise arrangements. Each member of a reporting group will be referred to as an ordinary member, but each group has to have a lead entity. The lead entity will have responsibility for the management of MLTF risk across the entire group and for compliance management by all of those members. Lead entities' governing bodies will be required to exercise appropriate ongoing oversight across the reporting group and to take reasonable steps to ensure that entities in the group are appropriately managing their MLTF risks and otherwise complying with their obligations. The lead entity's AML-CTF compliance officer will support the lead entity's governing body to fulfil those requirements.
So Peter, this is not tweaking around the edges. These reforms are significant.
Oh yeah, that's what I mean. You need to rewrite your AML-CTF program. You've got to think about your compliance program from the ground up.
And so what about HW funds clients who will be regulated once these reforms commence?
Yes, well, there'll be about 90,000 new entities regulated once the reforms are implemented. Most of these will be the so-called tranche 2 entities, who are real estate professionals, professional service providers such as accountants, lawyers, and trust and company service providers, and dealers in precious metals and stones. A lot of these entities are quite small businesses. So a key aim of the reforms has been to simplify the regime to make it easier for small business to comply. But they'll need to build their AML CTF compliance systems in time for the commencement of the reforms.
And how will this impact them, do you think?
Well, the very first thing they should do is to look at the bill to see whether they provide any of the services that the reforms will regulate. For example, under the bill, there are 2 real estate services that'll be regulated, and they are brokering the sale, purchase or transfer of real estate on behalf of a buyer, seller, transferee or transferor. That's one. And then the other one is selling or transferring real estate, where the sale or transfer is not brokered by an independent real estate agent. So that's what real estate service providers will need to look at. For dealers in precious stones and metals, there's only one service, and that is buying or selling precious metals, precious stones, or precious products, where the buyer or seller makes payment or receives payment, whether in physical currency or in virtual assets, or a combination, valued at $10,000 or more in the course of a business. So that's the service they need to think about. Am I doing that? If I'm doing that, I'm going to be regulated. So I need to start thinking about compliance. For the remaining group, which is lumped together as professional service providers, but that's the one that includes lawyers, accountants, and trust and company service providers, there are actually 9 services. So it's pretty broad, and it doesn't really matter what you call your business. If you provide any of these services, then you're regulated. So just quickly, those 9 services: assisting a person in the planning or execution of a transaction to buy, sell, or transfer real estate; assisting or acting in a transaction to buy, sell, or transfer a body corporate or a legal arrangement; receiving, holding, and controlling or managing a customer's money or other property as part of assisting in a transaction; assisting or acting in a transaction for equity or debt financing relating to a body corporate or legal arrangement; selling or transferring a shelf company; assisting or acting in the creation or restructuring of a body corporate or legal arrangement; acting as or arranging for someone else to act as a director or secretary of a company, a power of attorney, a partner in a partnership, a trustee of a trust, or a position in any other legal arrangement that is functionally equivalent to any of those. Getting close to the end now: acting as or arranging for another person to act as a nominee shareholder on behalf of someone else. And then finally, providing a registered office address or principal place of business address for a body corporate or legal arrangement. Now, there are a complex raft of new definitions, as you can imagine, that accompany those designated services, and there are some exclusions, and there'll be updates in the rules, but it's pretty far-reaching.
90,000 new entities. That's definitely a lot more work for Austrac. So what are the next steps with the reforms? You said at the start, the bill's currently before Parliament. Who knows how the Parliament will act, but what do we think of the anticipated timeframes as well?
Yeah, once the bill has progressed through Parliament sufficiently to be regarded as being in a settled form, we expect that the revised AML CTF rules will be released for consultation. Now, as many listeners will know, the rules provide a large part of the detail of the current AML regime. The rules will require a major rewrite also, as most of the key aspects of the bill are subject in one way or another to the revised rules, or they've actually been brought into the bill from the current rules. So until the revised rules are settled, reporting entities will really be unable to finalise their response to the bill in granular detail. And then alongside the release of the revised rules, we expect the other provisions associated with the bill to also be released, and their regulations, ministerial guidelines, and ministerial transitional rules, and also comprehensive guidance from Austrac with examples on how reporting entities can implement the new CDD obligations. So when we've got all those, and if the bill is passed, the current timetable in the bill is that it takes effect on the 31st of March 2026. So current reporting entities have until then to update their AML CTF operations. For tranche 2 entities, though, they can enrol as reporting entities with AUSTRAC from the 31st of March 2026, but their key regulatory obligations don't apply until the 1st of July 2026. So they have time to plan and implement their AML update compliance project before those reforms take effect.
So there is a bit of a lead time, but given the significance of the change, it sounds like that's going to be needed.
Oh, totally agree. There's a lot to do.
Well, thank you very much, Peter. Very much appreciate you joining us today and sharing your thoughts and insights on the reforms and developments around AML CTF. We've got a number of great episodes coming up in this series on dealing with risk and common failures in AML CTF programs and processes, outsourcing, independent reviews of programs, and the A to Z of KYC. As always, please get in touch if you have any questions. You can find our details on our website at hallandwilcox.com.au or connect with us on LinkedIn. And if you enjoyed today's episode, then please rate, review, or follow our podcasts wherever you get your own podcasts. Thanks very much for listening.
This podcast is not legal advice and should not be relied upon as such. You should always obtain legal advice about your specific circumstances.